All right, so we're having our views on gold and to try to see a top-down analysis on it and position ourselves for a good entry, good analysis, and enjoying the pips. Now, first thing we need to note is the Congress has been on break for some time now, and that's what has been affecting our fundamental news. You would notice that on your Forex factory, there is no news. Basically, there's been, like today, for instance, you can see even on Forex factory, we have the headline US government data impacted by the shutdown. So there's a shutdown, events are delayed or revised or cancelled, and that's led to no news today. Yesterday, too, there was no news that concerns the dollars. What is this shutdown about? Basically, it's just the government shutdown, the parliament shutdown. Basically, there are different parties that are being elected into the House. If they are unable to reach a consensus over a bill, over a policy, and then they shut down based on that disagreement. That's part of what we see on on this. That's part of how it affects our fundamental. Basically, they fail to pass appropriation bills, and which some of these bills are required to fund federal government operation. Okay, and once those bills are not passed, the government or federal agencies cannot spend money. Okay, without such approval. So that's what's happening. Basically, an overview of what's happening. Not to borrow with politics, but that's why we're seeing this. So what we've been working with majorly has been technical analysis. However, there are still, you can still see the likes of some news, even though not announced, taking effect. You will see some sharp moves at some times and the likes. Now, this is my daily chart on the gold. And as you can see, gold has, of course, been in an uptrend since like forever, right? Gold has been in an uptrend since like forever. That's, let's say, from the last time there was a range here. Um, Currently, that's about 7,000 pips, right? The daily, like we know, every candlesticks here represents a day. Yesterday we had a bullish, a bullish, a bearish, a bullish, 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 bear. So the last time we had, um, like the last time we had 5 bullish runs for different days. And then there was a break, a bearish, so now we have just 2. Okay, if you look at it, we have at least 1, 2, 3 before the bearish. Before this bearish, there was 1, 2, 3. It's just this place that we had maybe just once, just one daily candle, and then the next candle is bearish daily. Well, aside that, we've been having at least 2, 3 days having a bullish run in the market. That's just an insight. And as we know, gold is currently in an all-time high. And it has been forming that virtually almost every day now. All-time high. All-time high simply means price has not gotten there before. So we're going to repeat that. If price has not gotten there before, that means there is nothing for you to look at to compare what price is doing and the likes. No resistance, no support on the left. So now that we have that, we see price closed bullish yesterday. Today we have what is similar like an indecisive candle yet, because you can see it went up, it came down. So as it is right now, it can go anywhere. It can go up, it can come down, whatever way. So that's part of what we want to try to analyze. But if you look at it here, our closest market structure level is this place. This is the last support that was created, which was 3 days ago. That was when we had market structure. Right now, we don't have a market structure, and you cannot just jump in a buy because that means you're repeating your stop loss here, which is going to be a huge hit. That's going to be around 850 pips from from the low of the day. So we don't have any direction on the daily right now. We're open to whatever the market gives to us. On the 4-hour time frame, we can see that we can as well adjust the last market structure to this place. Okay, and if you want to still keep the one you had on the daily, you put it here, right? Now we can see on the 4 hours, we're seeming to have what we call what looks like a range here. But if you look at it closely, price, the last 4-hour candle actually closed below that range. Interestingly, that last 4-hour candle just ended about 10 minutes ago. We're in a new 4-hour candle session. Now, if price could close below here, for just basic standard, once price closes back here, we expect to see maybe a retracement, because this was a support, right, which price has closed below, and then we expect to see what? A retest and maybe a continuation downwards. And this is seeming like this is the retest, which is making sense, right? So we're going to have that. So I'm going to put my support here so that we know price has broken it. So this new 4 hours, will it retest and drive downward to close at the week? Will it retest and at least close below and then continue going down? Or will it flip back up and close above this range? But then, or close, it can also as well close within the range. But we need to see what price closes at. So because it's the new 4-hour time frame, really you cannot tell if it's going to continue. Structure to all right. I believe everybody can hear me, right? All right. Thank you. Thank you. I got that. Okay, then. Great. Who is HP? And HP just signify what this is. All right. All right, so proceed. So we can see this is the 4-hour range we've been in, and we can see that price has broke out of that range. It's been in that range in the last four-hour candles. 1, 2, 3, 4. So this is a good, interesting place we can look out for in future to see what price wants to do. Now we can see the 4 hours has actually tapped into it, and you can see it's not going into it. But like I said, the 4-hour candle just opened about 15 minutes ago. You can't tell the direction yet. You have to go to your smaller time frame, and that's where we go to the 1-hour time frame. Now, in the 1 hour, you can further, adjust your levels, and you can see there are more and better market structures for you to work with here. We'll be using these ones because they are very close to price, and we'll have the resistance here, and this our range. Now, in this range, we'll refine it as on a smaller time frame, and we'll see there are some places we shouldn't take trades in. So I'm going to adjust this range to this place. Now, the last 4 hours actually came all the way down, respected this low, and at the last 1 hour to the 4 hour, like, there's a 4-hour strategy. The last hour of the 4 hours, you can see there was an opportunity, but the opportunity was a bit dicey, and that's why I didn't post it. If you look here, you see you have your resistance here, and then you have another resistance here. You have a support here, and you have the support here. Now, this candle close in between these two range, and it's very risky to take a trade within this range because, as you can see, it's two supports that are very close by. So I didn't post this. This next one too, you see, it was struggling. It didn't close above. Assuming it closed above something like this, would have been a good trade. I would have called out for you guys. Something like, assuming this one closed something like this, with a body above like this, I'd have called out the entry here. but the way it closed was not really looking smooth. So it closed within this range. And why is it a range? Usually, this is the support. This was another support. So price could easily, price broke the supports down, right? It could easily retest those supports and then continue driving down. You understand? So because of that risk, that's part of why I didn't call out the trade. I needed it to close above for which order confirmation, and there was no confirmation. But then beautifully on 15 minutes, this is part of why you have to jostle between time frames. On 15 minutes, we had something like this. Now look at the range on 30 minutes that price refused to close above, but on 15 minutes, you clearly could see it closed above here. But on 30 minutes, it was still within the range. This still wouldn't take I didn't take the trade then until this candle closed. This candle closed within the range, but then the next opened, took off. And that was where my entry was. Here was my entry at the break of this high, with my stop loss being at the bottom here. And my TP was up high there. So the trade was something like this. Like this. My TP was, yeah, this one here. So I wrote that, and then it broke at this support to turn it to resistance. So I had another re-entry at that level because price closed. This was a breakout structure strategy. Price broke out. This candle came down and then went back to break the high and then continue up. So I took this trade as well, my stop loss here, and I closed everything at the end of this range. Now you can see that 4-hour range we drew out. That is what we have even on this 15 minutes. This is the range here. From here, I mean, from this place to this place, that's the 4-hour range. And you can see our price has been really, really indecisive inside there. So that range is one of the places you identify and you term it as a no trade zone because you really cannot buy confidently nor sell confidently in between unless price closes above or below. Unless price closes above or below. Like this close below, but there is no bottom wick here. So you know our no bottom wick rule, no bottom wick rule. So you see, if somebody would have jumped into this sell now because this candle closed below the range. But you can clearly see there's no bottom wick. And if you jump in this sell, you'll be in drawdown by now. And that's what some people will be in. You understand? So let's continue with the top-down analysis. So we're at 1 hour time frame. I don't take too much of your time today, just 30 minutes, what I said. So on 30 minutes, this is how it looks like on 30 minutes. Now, it makes total sense because you can see the levels are, you can further refine the levels, right? On 30 minutes, we have here, let me answer this. So this range was from our 4 hours, so we'll leave that. You then adjust your levels. This is one level here. This one is not needed here. This is another level here. This is another level here. I hope you can see how I am picking the levels. It has formed as support. Price reacted there. Price reacted there. Price reacted there. Price reacted here. Price reacted here. All those places price reacted are going to either be your support or resistance. Either support because they formed market structure. You can see that's where price reacted from. So what you're highlighting is should price come back to those levels, you definitely would see a reaction. Those reactions are part of what you are trying and aiming to take advantage of. All right. So I'll clean that. So I don't need this right now because price is far away from it. I may not need this one too because price is, but I can just leave it for education purpose. So you see these levels. Now look at the range we picked on the 4 hours. Let me highlight that range again. Let's go to color black. This is the range. You can see the color. This is the range from here to here. Now you can see it is a pointer and a very good observed area, because you can see price reacted clearly in this place. And the above price reacted above in this place. See, this candlestick came in, reacted above. You see all of those things inside there, inside there. So those ranges are very, 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 very important. So when you see me drop a chart and I highlight in this color, I highlight the color, a particular place, this color. Just know that those places, you have to be very careful if you are taking a buy or a sell. And if you're going to be in the trade, you should also be looking at closing partials or taking TP at those levels. Now let's go to the 30 minutes. We don't have anything to do much yet. On the 1 hour, let's see, does it give us any direction? Oh, yes, it does. Now let's look at it. Price has been in an uptrend. Beautiful. It's been in an uptrend. You can see it here. But then we can see price broke that trend. Now, if price has broken that trend, that means that uptrend is no longer upping or is no longer a uptrend. Right? So let me just do this. We can see price when we say price has been in an uptrend, that means price has been within a particular region to the upside. You can see how it is not exceeding that until this. So if this has broken out, that means this uptrend is no longer valid right now unless price comes back in exactly again to continue. But right now we don't need that. So we see what we see, not what we want the market to do. So now that price has broken, the simple law of trading is when price breaks a support, a resistance, a uptrend, a downtrend, you expect to see a retest before a continuation. You expect to see a retest to the upside before a continuation. And that's what you see price maybe trying to do. So on our 1 hour, we would tend to be bearish. Now, this is also in line with our 4 hours. Look at the 4 hours. We said the 4 hours actually broke out of a range. This range, this was the support. Price has actually broken out of that support in this place. You see it closed comfortably below. It's not like you need to zoom in before you see whether it broke or not, or it closed below. But this next 1 hour, which is just 30 minutes ago, is still maybe creating a top wick and maybe will continue downwards. You see, the 10 maybe, despite your analysis, there is no 100% guarantee. You understand? You also need to always put that percentage for assumption, maybe. But now we're riding with that bias, bearish bias from our 4 hours. On our 1 hour, we clearly can see it also aligns with the bearish bias, although it is buying now, but we tend to think this is going to be a retracement. So it means with this bias, I am not looking for a buy. Any buy you are taking is going to be very risky. Maybe you just want to scalp because you want to just scalp these retracements. But the long-term trade will be for a long-term sell. Another reason why you conclude this is also changing the bias. If you look at what price has been doing from here, we had a low, we had a higher low, we had a low, a higher high, and a higher low, and then continuation like that. So let's draw that out. I want to make this big so that we can see. Like on here, no, that's too big. Yeah, this is good. So we had, let's say we had a low here, we had a high here, we had a higher low, then we had a higher high. So I'll depict it with HH. You can see we had a higher low here again, HL. Then we had a higher high here, and then we had a higher low here again. Then we had another higher high here. But then see the low now becomes a lower low. Now, if this is what we have here, then over here, we'll be expecting to see a lower high. Now, let me just put this. So this is our low. That means price was at a particular point was low here. and then price drove up to create a high. The next time price came lower, we see price came lower than this high, but higher than this low. So that's why we called it a higher low. Okay, the next one, you can see price came up higher than this high. So that's why it's called a higher high. At this point, you can see again another low, but lower than the high, but higher than this low. So that's why it's a higher low. You can see here too a higher high. You can see here too a higher low. You can see this also was a higher high to this place. Like you can term that as higher high. But the corresponding lower low we're supposed to have was around here. But we can see price came all the way below this previous low to create another low. So this is now a new low, which is lower than the previous low. And the corresponding high will be a lower high, lower than this high. So when that forms, then we would have confirmed that yes, this trend has been broken. Price has started a new participation, a new movement. If there's going to be a lower high here, okay, then it means we'll be expecting a new lower low around here. This is basically what you want to catch. This is basically what you want to catch. So whatever the structure gives, whatever it gives you the structure, like let's say this candle, for instance, closes. We need a candle to close bearish first to confirm that the lower high has been formed. It needs to close bearish. Remember, we're also on the 1 hour time frame. So once we get that, then you would say, okay, my entry will be here, my stop loss will be at the last high, and my TP will be TP1 will be here, TP2 will be continuation. I hope you understand. Let me screenshot this and send to you guys so you can use it for practice. Let me do this one. Red is going to be our stop loss. So stop loss will be here. Your entry will be green. Let's put green for entry. Your entry will be at the break of that candle, and your TP will be TP1 will be at the spots, TP2, and then you continue like that. So let me screenshot this. So sending to you guys. Right. So now I didn't need to draw this. I already can see it myself, so I know. But I'm just drawing this so that you guys will understand. When we say there's a break of structure, there's this, there's that. So when you hear break of structure, basically it means price has started forming a new low, a new high, contrary to what it was forming before, which is something like this that we can clearly see. So I'll clean this. I dropped the picture in the group already, so you can have access to that. All right. So remember, this is our 1 hour. So we're taking on our 1 hour time frame, we're taking it to the same bias we had on the 4 hours, we're now having on the 1 hour, which is splendid. It has to align. Your bias on 4 hours cannot be bullish, your 1 hour bearish, your 30 minutes range, and then you want to enter a trade. You need all those time frames to align, or majority of the time frames to align. Now, here we go on the 30 minutes. You can see the higher low, the higher high theory also plays out here, and it's seeming like the lower low has actually the lower high has actually formed it, because you can see this close bearish. But as much as it has closed bearish, remember there is no bottom wick on this candle, so it's no confirmation for me. Some people it works out for them. For me, it doesn't work out for me. Okay, so I'll wait for a better confirmation. Especially if this candle can close bearish again below here, that's a good one. I'll find a screenshot about candle sticks. I'll send that to you guys in the group also. Running behind schedule. I want to round up. So now I'm on 30 minutes now, I'll now adjust my levels. Whatever ones I see that doesn't align. You can see this aligns from my 1 hour as a good level, which is fine. But we can see this one to an extent is not looking like accurate. So I need to adjust that. This particular one, you can see it's not on any structure here on 30 minutes. So I'll just adjust that to the next one. So this one just formed just now. This 30 minutes just ran it up. So I would still ignore this. I'll put it here. All right. So I'll put this here. This range is still very valid. Whatever happens in between here, I'm not interested. I need price to close above here. So I'm going to be something, I would say something like this. I'll say something like this. Buys. I think that's too big. Let me make it smaller. It's going to be something like buy above. And then I would have a sell below. But in between, I'm not interested in anything for now. Whatever price, whatever closure happens in between here is not my business. It's not my concern. Inside here is not my concern. It's only above or below that will be my concern for confirmations of buy and sell. And you would see, even if you look at it closely, you will see the reaction price. See this candle now. It went into that range. It closed inside. It came all the way down. This one went inside, came down. So it means there is something inside here. And that's something inside here. I don't want to know it. I'm not interested in knowing it. I just want something that will give me my money. And something that is hampering price from either going up or down is not my interest. So this is what I have on my levels, which is very cute. So if I have this, then what I'm still very bearish on 30 minutes. All of the same analysis we did on 1 hour is still valid. You can see this level now was a support before here, and now it's seeming to form a resistance here because you see price has formed a structure there. So this line is still very, very valid. So whatever is happening after that line is what I'm looking at. I'm looking for something like this, closure like this. Then maybe another retest to this side, then come down, and then we ride the downwards to our first TP. First TP will be here because you can see the structure here. You can see something here. So they can also be an hindrance to your price because they are supports. You see, they were supports. So they can also support price to go back up. So once price gets there, you do something. You close partial, set B, whatever, do something, depending on where you cut the price. The other TP will be here. Then, of course, the next TP will be this week here. And then you'll see ultimately maybe price can get here and we can ride that. So on 30 minutes, there is really nothing different from the 1 hour that we did. Now, let's go to the last time frame, which is on 15 minutes. And again, I would reiterate, for you guys now, anything you are doing beyond the 15 minutes, you are wasting your time. Do not go below the 15 minutes. 30 minutes if possible. Stay on 30 minutes. If you don't see any reason to trade on 30 minutes, then call it a day. Come back later. On 15 minutes, it's still something you can use to do your entry because I already have my bias from my 4 hours to be bearish, my 1 hour to be bearish, my 30 minutes also to be bearish. So on 15 minutes, I'm only looking for entries. I'm not looking to use that for analysis. I'm looking for good entries. Like you can see now on 15 minutes, you can see there is a bearish close here, but this is looking like a doji. And then you want to see price go down. But currently, if I want to enter this trade now, I'll be looking out to enter from here. Anything that makes price break below this level, the sell will be valid. Anything that makes price close below that level, the sell will be valid. So you can see how that's just 20 pips away from where price is right now. So you can see why it takes time at times to pick a trade. Yes, because it's money, it's hard-earned money we're throwing about. You need to refine your entry, be sure of your entry, be proud of your entry, so that even if anything happens, you know you did your due diligence. You understand? So this would be the trade, or we'll see. This is already 11:30. Most likely, we'll see price range within here. The trade may come in. We'll probably see this. Is probably what we'll be seeing price do. We'll probably be seeing price do something like this. So maybe until 2 o'clock New York session open before we see volume coming again, and we can see a good direction for the markets. Right. So that's it. The top-down analysis. We're bearish for now, and then we're looking to see a good entry for ourselves, where we can take a good trade. And if we don't see, we'll wait until we see one, and that's it. Do you have any questions?
It's identified with A1.